Morning, everyone. Welcome back to the channel. Today it is February 17. My time is noon, Central European time, and the markets are a little quiet at this moment, I guess, because everyone's waiting for the FOMC meeting and eventually other news coming up in the following days or next week to drive the market structure and the prices. So I think it's a great opportunity today to look at an indicator, one of the most important indicators actually, if not the most important, which is the moving average convergence divergence, also known as the MACD. Unfortunately, an indicator which is often misused, misinterpreted, or sometimes just not understood in its entirety. Actually, as an introduction, I would like to give a little advice on the use of indicators. Here, it is not sufficient, generally speaking, to put an indicator on, let alone just one indicator, and start tweaking it right from the beginning and without fully understanding what the indicator is. There's a little study to be done for each indicator before you even should start and use them, let alone putting 2 or 3 different indicators because you saw them on a YouTube video and they are immediately tweaked as if that magic tweak is going to reveal something extraordinary. No, that's unfortunately that's not how things work. Every indicator is, let's say, a little more complicated than that. And you should spend, a few months with one indicator alone before you move on to the next one, or you add one on to see what it does, because you really need to understand it fully before you can tweak it or anything like that. So this is why today we're doing a deep dive into one of them, because I feel this is important. So let's get on with it, because this is going to be quite a long video and we're already at 2 minutes, almost 3 minutes over. So let's start. First of all, what is the MACD? Now, let me pull this, and you will notice straight away that I'm not going to tweak anything in the indicator. I'm going to go with the general ones, right? That's it. Moving average, convergence, divergence. This is not, this is free. You don't have to purchase it. It's not a coded indicator that does something special. It's a simple moving average, convergence, divergence, right? So I'm going to pull up the settings. Sorry. You can see I'm not changing anything. The inputs are the fast EMA is 12, the slow EMA is 26, and the signal line is the EMA 9 of the MACD line. So all of these are exponential moving averages, EMA, and the source is the close. We're going to leave the source as the close already. We're not going to change it into high, low, and the average divided by nothing of that, right? We're just going to leave it as the close, because what is important is the close, right? Generally speaking. So let's not tweak anything. We just use it exactly as it is. So what is the MACD? The MACD is an indicator that measures the trend, acceleration, and deceleration. You can say that the MACD measures the momentum of the trend. It does not predict the direction. It does not predict the price, and it does not predict or define the market structure and the direction of the market structure. The only thing that the MACD does is it tells you what momentum is going on at that moment. In other words, how fast, or you could say aggressive, the price is moving, but relative to its most recent equilibrium, right? So let me go on with it, and then we can go back to this definition. But you have to understand straight away that this is important, right? The MACD doesn't measure, it doesn't predict the direction, it doesn't predict the price and or the market structure. You need to know what those things are, and then layer on top the MACD, because everything the MACD is, it tells you relative to its most recent equilibrium or zero. It tells you then how fast the price is moving, what kind of momentum there is, right? Why do you need to know what kind of momentum there is? Well, because you're only gonna get trades when the momentum is happening, right? You're not gonna enter in a trade when the momentum is gone. That doesn't make any sense. Just because you're sitting there at the computer, right? Or you're sitting there in front of your order book. So what is the MACD? Well, the MACD line, and you can see here, the MACD line, I haven't changed even the colors, right? Well, maybe I did tweak a little bit. I made the red, the loss of momentum under the histogram, so that the darker red, I made it a little darker, and the darker green, I made it a little darker as well, because I want to see I want to see it clearly, you know, because sometimes I'm working on different screens. So I need to see clearly when there's a change of color. That's pretty much the only tweak that I've done here in the colors, but very slight, right? You can, if I reset this, you'll see that there's like kind of weird colors. So to me, they're too flashy. So I put them, you know, normal green, normal red. And to me, the light red is, this was more kind of a white or a pink, if you may. And this was more like of a light green. I changed these to, they're too flashy for me like this. That's why I changed the colors. But you can go with my colors, or you can keep those. It's the same. It doesn't make any difference as long as you follow what I'm saying. So and you can see that I haven't changed. I haven't dropped the MACD line or the signal line. And the zero line, you can put it in white if you want to see it really much more defined, but that doesn't change either. I put it in light gray because I don't want too much distraction in front of my eyes, right? That's the only reason. So let's go back to, I'm going to go with my colors, but the colors are just the only thing that I've changed. So now what are the elements in this indicator? Now you have, besides I'm on the pound yen, which is probably not the chart that I would be using. So I'm going to change it to the dollar, to euro dollar, and I'm going to leave it like this. Maybe these could be a little, let me bring the opacity back to where it should be, because otherwise you guys are not going to see the full indicator. Okay, so now you can see clearly the MACD line is the blue line and the signal line is the red orange line, right? So what is the MACD line? The MACD line is basically the difference between the two exponential moving averages. The slow one minus the shorter period minus the longer period, right? So you remember that the periods are 12 and 26, right? So the fast length is 12 and the slow is 26. The difference between the fast and the slow exponential moving averages give you this line at every given moment, right? So here, if you go on this candle here, and let me mark it with let's go, we're at this this candle here. Sorry. Let's say we're at this candle here on the chart, right? It would be nice if I marked it. Actually, you know what? Let me mark it with a vertical line. Let's say you're at this candle here, right? And this would be a candle going down, because you can see the histogram is going down, right? If I pull the chart, well, it's not going down, but it's at the end of of a retraction, right? So this is the retraction, and this candle here, which marks the end of the retraction where the price is going back up, it's still in the dark green, right? In the MACD, you can see that the MACD line and the signal line are all above the zero line, which is this, right? On this time frame, on the 1 hour. Why is that important? Well, because, and I'm going to go back to the elements of the MACD in a second. This is important because if you're above the zero line and you're in the green in the histogram, you're trending upwards. You can see, right? On this time frame, right? So what does this mean? Well, you're not going to get a short here because the circumstances aren't there to get a short. So see how this is important, but we'll get into that detail in a second, right? So let's finish the description of all the elements that we have, and then we'll go back to all of this. Now let me erase this. So again, what do you have here? You have the MACD line in blue, the signal line. Then what do you have? A zero line, which is here, that divides when the MACD crosses above the zero line, green histogram, from the red histogram, when the MACD when the histogram falls below the zero line. Now you will have noticed that the MACD can be above the zero line together with the signal line, but the histogram has fallen in the red, and that is a very important point, and I'll tell you why in a second. So the MACD line, the blue line, measures the trend force and the acceleration. Okay. The signal line, it's like a smoothed baseline of the recent acceleration, right? You can see it here. It goes back to its baseline and then goes, right? And it's a smooth 9, let's say, right? We're always going to leave the MACD levels as they come from the factory, right? We're never going to tweak them, especially when we're doing the dollar pairs, right? Euro dollar, pound dollar, dollar index. There's going to be other videos where I'll explain this more in detail, but we're not going to tweak it ever, basically, right? We're just going to leave it as it is because it's better, it's more consistent, and by experience, actually decades of experience, and not from just me, from many traders. You shouldn't tweak them because they're less useful as if you were to leave them as they are. So don't tweak them. That's it. End of the story. So again, the MACD line measures the trend force and acceleration. The signal line measures the smooth baseline of the recent acceleration, and the histogram is let's say, call it the rate of change of the force, right? So if it goes darker, and you're in the up move and it goes darker, you have a decrease in the trend force. If it goes in the red, you have an increase in the trend force as long as it stays in the dark red. But if it comes in the lighter red, you have then a decrease, right? Again. And the zero line represents the equilibrium between the fast and the slow moving averages. So that's when things can turn, right? Basically. So above the zero line, you have a bullish regime, right? And below the zero line, you have a bearish regime. But is that always true? Well, no, because there's a hierarchy in the regime, right? What does that mean? It means that you can be in a bullish regime on the 1 hour, right? But then have on a smaller time frame a red histogram. And what does that signal? Well, that signals a pullback. It doesn't signal a change of direction just as yet, right? Because you're still above the zero line with the MACD, right? So if I pull the chart now, you'll be able to see what I mean really quickly, really easily, right? So let's say I'm in the euro dollar. Let's pick another example here, right? So here, for instance, right? You have an up move here, right? And you can see the histogram is green and the MACD line and signal line are all above the zero level of the histogram. And then you have a pullback, right? So how is this a pullback? Well, because at least until here, right, the histogram, you came in the darker green and in the darker red, right? So because the price went down and the structure went down, but you are still above the zero line with the MACD line and the signal line. So that tells you that you're in an uptrend, and this red part is just a pullback. If I now go on the 30-minute and I go in the same area here, you can see it clear. You can see it even better, right? Because you have 1, 2, 3, and this is the structure 1, 2, 3, right? But up until here, you're also in the 30 minutes above the zero line, and of course you're going to be above the zero line also on the 1 hour, right? So if the MACD is trending above the zero line and you have a red histogram, it's a pullback, right? If the MACD instead was below the zero line, right, and you have a red histogram, that's a continuation, right? So in this piece here, the MACD is the MACD is always below the zero line. The MACD is moving, with its baseline signal line below the zero, right? And every red histogram that you get, so, move down, move down, move down, move down, move down, all of these, red, 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 red. They're not pullbacks here. They are continuation because all of this is below the zero line, right? So remember, this is the context hierarchy and the regime, right? That I was telling you earlier. If you're above the zero line with the MACD and the signal, the reds are pullbacks. If you're below, the reds are continuation. And of course, the inverse is the same, right? So, but is less important, right? Because, well, it is important, but I'm saying the inverse is the same in the sense that if you're above the zero line and you get a green, it's continuation of the uptrend. And if you're below the zero line and you get a green, it's just a pullback. Okay, so the question is, how is this useful? Very, very useful. Why? Because if you're going up here, right, you have 1, 2, 3, 1, 2, 3, and you don't have any divergence between the two impulses. If you have a red histogram and you're above the zero line, you will for sure have another impulse. And that's exactly what happened. Same here. If you have an impulse to the downside, which is this, actually, we need to mark this because otherwise I'm also going to get in trouble here with some of you guys that are going to say, what is this guy talking about? So let's be very precise here. Let me mark the end of the move. So now, when this happens here, and the last move is, of course, the signal and MACD line are going to be above the zero, and you have, a green histogram. All of a sudden, you have a red histogram, right? And this could be a pullback, right? Because remember, the MACD line is above the zero, right? But what happens here? What happens here? Well, I'll tell you what happens here. If you go, and let me erase this vertical line actually because it's in the way. Now, if I stretch this out a little, you can see that before the histogram turned red here, in the last impulse, you had divergence, right? So higher highs in the price level and lower highs in the histogram, right? When is that divergence confirmed? Well, as soon as we come below the zero line on the histogram. So when this happens and you're here, now you got to ask yourself, is this the last piece and we're coming down for a series of up and downs, but trending downside like it actually happened, or are we going to have more up? And that's the key, right? So when are you sure that we're going to have a series of down? Well, if it comes for a down move, it crosses, and then you have another move down, right? Then you're downtrending, because all of a sudden, guess what? The MACD signal line is now below the zero. So you're going to count every counter histogram, which is a counter structure direction, and it's counter because the MACD is below the zero on this time frame, 1 hour. You're going to count every counter as a sell opportunity. 1, 2, 3, 4. Right? Now, are all of these sell opportunities usable? Well, that's where you unite the MACD indicator with other things. So what is the time that you're trading? What does the commodity channel index say? What is the relative strength index say? What instrument are you looking? Is it the right time of the day to trade that instrument? But most importantly, where are you in the structure? Are you at a weekly high or low? Are you at the previous day's high or low? What is it doing, generally speaking, right? You're not gonna take a short every time you see the MACD counter turn in the green when the instrument is trending down, right? There's a little more to that, but for the moment, it is sufficient. Sorry, I got locked. I got in a loop with my own voice. For the moment, all that suffices to know is that at some point in the structure, there's going to be divergence. So there was no divergence between, actually, let me go back to the beginning of the move so you can see the whole piece, right? We're not, actually, let me erase these drawings, which might be for someone or for some reason misleading to people. So let's look at this move here, from here to here, and then let's look at the move from here to here, okay? So what do we see here? Well, between this and this, you don't have any divergence. What about between this and this? Neither. No divergence. What about between this and this? Yes. Not much, but some divergence, right? Now, are you going to look at the MACD line and the signal line for the divergence? No, you're going to look at the histogram, right? That's extremely important. You're going to look at the consequent highs or lows according to what trend are you looking, and you're only look at the histogram. You're not looking at divergence between, the MACD line following consecutive points, right? Just the histogram. Let me make sure you guys understand that, right? So once that happens, you stop going for the buys unless you see other things, but that's too much to get into here, this is already very complicated for most people, I'm assuming, right? So you're not going to get into buys. When you see divergence, you're going to stop taking buys and you're going to wait. So you wait for the first move in the opposite direction, and then you see what happens on the MACD and signal line. Are they turning below the zero? And make sure you're on the 1 hour, because you're not, of course you can take trades on the 1 minute, 3 minutes, 5 minutes, whatever. But if you want to, successfully build your account, you're going to look at the 1 hour, and you're going to try and find, something that goes on for several days, right? So this went on from February 17 to January 17 or 18 to January 29, and this was a good trend. You had at least, one, two, this maybe if you were good, and three buy opportunities with a lot of potential profit to be made, which some people are going to be harnessing more of that profit, and some people less. That's your skill, right? That's your edge as a trader. How much you can stay in the trade and how quickly you can get in, and all of these will change your risk to reward ratio. So also these things are extremely important. But for the moment, we're looking at the deep dive into the MACD. All there is to say is that you're going to get a 1 trade, 2 trade, possibly 3 trade, and possibly 4 trade, but let's say at least 3. And then when it hits this, you're going to stop, because all of a sudden it comes down. Well, you would have already taken profit at some point on this trade, but let's say when it comes down again, you're not going to get another buy, even if you see some sort of setup, which here there wasn't, by the way. Why? Because you have divergence. And from that moment on, the first trade down, you're waiting for buys, so you're not getting in the sell. And when this happens, but all of a sudden you're going to see that you're in the MACD below the zero line, well, then that's when you will be considering getting into shorts instead of buys. And this is the euro dollar. So possibly, actually not possibly, but just most likely the simplest chart you can ever trade, right? So I think we covered quite a bit. Just give me a second here. Let me think if there's something else that we might need to cover. No, I think we covered most of what we could cover. There's probably more to it, but I would say that it would be better to do it would be better to do a summary of what we talked about, right? So I'm going to go at it again and write quite quickly. Again, this is a summary for those who are more into cheat sheets and want to just listen, have a high speed brain and just want to listen at the last like 2 minutes. So I'm going to go the model again on the MACD. The MACD defines the energy and the timing of the momentum that is happening at that right moment, right? It's not measuring it's not telling you the direction, and it doesn't tell you where the price is of a specific instrument, financial instrument or commodity is going, right? The price is what steers the direction, and the structure defines where the things are going to go next. So just as an example, this impulse, correction, impulse, bigger correction, this structure here defines where the price is going to go next and the direction, right? The MACD doesn't define these things. The MACD tells you, measures the momentum, right? Basically the trend acceleration or deceleration, so not the direction, and the zero line defines where you are in the in what place you are in the structure, right? The regime, so to speak. So above the 0 line, you're in a bullish regime, right? Below the 0 line, you're in a bearish regime. It's as simple as that, right? So every counter in a bullish regime is going to be you preparing for another up move and trying to find a buy setup. Every counter in a bearish regime is going to be you preparing to enter a short because the MACD is below the 0 line. That's the regime, right? So then you have all sorts of divergence here that you can talk about. But for the time being, and because otherwise we're getting into too much detail and it could be confusing, most importantly, for the moment, you just know that the regular divergence is the most important one, right? It's the most important one for you to study on now and back testing the charts. So from a high to a higher high, you're going to check if there's divergence, and you will find that there's not going to be a divergence between higher highs, and then at some point there will be a divergence. So in this context, on the euro dollar in January, it would have been between these 2 points, right? Higher highs, lower highs on the histogram, right? And same here, right? Low, low, divergence, lower lows, higher lows on the histogram, and that would mark the end of the downtrend, right? And then you entered well, there was another low actually here, but this wasn't a good trade, as you can see. And then you're kind of ranging now, so you're in the dark, right? So the structure break is what you want to look at. So this moment when the MACD line crosses the 0 on a decent time frame, that would be 1 hour or 4 hour or daily, right? You're not going to look at other things. And same here, right? Now this could be confusing because here it went below 0, yeah, but it didn't hold that. It came back above the 0, the MACD line. Here it held, right? Even here it held to a certain extent. In fact, you had another low. This can be confusing if you don't have any experience. But so this is it for today. I hope you enjoyed this educational video on the MACD. More will come on the MACD and how to use it to harness the best profit potential, the best opportunities and potential profit to be banked, and then I can show you in other videos other professional ways on how to use the MACD, first on its own and then in association with other relevant things that you want to look for in the charts. Okay, this is it. We're over 33 minutes, almost 34 minutes, a really long session. I hope you enjoyed it, and you're welcome to subscribe if you like what you're here and you think it might be useful to your trading. And have a good day.